Markets are having a fit today after a nice little Fed rally, Fed bounce yesterday. So let's take a look and see what's going on in the markets today. We're going to start with traditional markets. Dow Jones is down about 1,235 points today, 3.6%. S&P is down 3.9%, 167 points. The NASDAQ's down 691 points, which is 5.34%. And yesterday we were watching the news out of the FOMC. Chair Powell came out and said inflation is too dang high. They're going to work on it. They're going to do everything they can to bring inflation down. But they did say we are not going to engage with a 0.75 rate hike. The markets initially bounced yesterday, had a nice little rally yesterday on the news that the Fed was not going to get more aggressive with interest rate hikes or with quantitative tightening. They're going to ease into it and try to create a soft to softish landing. Unfortunately, the Fed put out the wrong messaging. The markets bounced on that. It was just, again, a technical reaction rally. And now the market is continuing to price in the effects of what the Fed said. Inflation's way too high. They're not going to be able to get it under control anytime soon. The war is still an issue. China lockdowns are still an issue. Housing costs are through the roof. Fuel costs are through the roof. None of that's going to get better anytime soon. All of it is going to weigh on the economy and push the economy into a slowdown. So that's what the markets are reacting to now, is the reality of the situation based on what the Fed indicated yesterday. And over the next 2 days, well, I think tomorrow or maybe it's next week, all of the Fed board members are going to come out and start explaining their viewpoint, their stance, and start telegraphing what's going into their decision-making in future meetings. And right now, what the markets know is that the Fed is way behind the curve on inflation. They've lost all credibility. They cannot control inflation. They can't affect inflation. All they can do is destroy demand. And in order to do that, you have to put the economy into a recession. You have to raise interest rates, which hurts everybody across the board. You have to let the markets continue to deflate and reprice. And we're going to take a look at what that means and what that looks like. So we're continuing to see softening earnings as, Amazon's earnings are down. Unions are popping up everywhere, affecting costs and things like that. With Apple, with Starbucks, with Amazon, I think you're going to see more and more of that as we move forward in this employment environment. Cost of labor is way up and is one of the biggest impacts on a business. So those things are going to affect earnings and projections moving forward. So let's take a look at the charts and see what's going on. These are the two trend lines on the hourly. This is Bitcoin on the hourly. We were watching this major range here, but let's take a look at the daily, and let's go ahead and go into the Dow Jones. And this is what we were looking at the other day. Dow Jones is working on putting in a lower low, taking out this market structure range here. If the Dow takes this out, there was a wick low there the other day, working on this area. If it takes out this low here, then you could look for more continuation to the downside. And this is what bear market unwinding looks like. Several people are calling for an all-time high or new highs in traditional markets, which would obviously translate into crypto markets. And without the Fed reversing course, that's just not possible. So until the Fed reverses course, in other words, lowers interest rates, picks up QE again, and just completely reverses course, this isn't going to change its direction anytime soon. So that's just something to keep an eye on. The NASDAQ is already working on a lower low. It's breached this major market structural support here and is now well into bear market territory, down. Let's see, it's about 23% right now. The Dow Jones, I think, is finally down about 10%, which is what I've been looking for. Yeah, 11.23%. S&P should be in 10% correction territory. Not quite bear market. Yeah, 14% in the S&P, putting in a lower low. So we're going to see a lower low, new lower low in the S&P, new lower low on the NASDAQ. The Dow Jones has not quite given that up because a lot of the stocks in the Dow are considered defensive plays. So that's going to hold up a little bit better in general, obviously bigger market cap, things like that. So we'll have to keep an eye on that. Let's take a look at Bitcoin here on the daily. And these are the trend lines we're watching. Obviously, this is the top of the channel. I like to trend the close, and I like to watch the trend of the closing daily candles. and price has obviously broken that support. And then we have our wick lows. Price has now lost the last line of support on that wick low. And again, we need to see where markets close, right? Especially for the traditional markets. We still have an hour, 15 minutes left to go before the close as I'm recording this. So the momentum of price action into the close gives you a good indication and direction for the next day or two ahead. All indications are we should continue the momentum of the sell-off into the close. And then tomorrow will probably be another down day rolling into the weekend as investors continue to move to cash. We didn't look at the Dixie, but the Dixie's had a little bit of a bounce here today. And has risen above previous market levels, bouncing at that previous all-time high or recent high. So looking to break that level there. So we'll have to watch and see if the Dixie can put it a new all-time high. But the Bitcoin right now breaking that wick low that a lot of people have been watching in this channel. And this is what we were looking at yesterday when I made that video. What we're looking for now is it'll probably close in here, could come back, test that. And then if it rejects, it's going to reverse down to find that market structure, test that market structure low from last summer in the 20,000 range. So that's kind of what I'm looking at on Bitcoin right now. Let's take a look at some altcoins because they're at critical levels as well. Ethereum still has quite a bit of support here at these levels. 2100 is the number we're looking for the last line of support for Ethereum before you can look for further downside. So for Bitcoin, obviously 33,000. If price breaks 33,000, then we're looking to go test some of those summer lows of last year, last summer lows. For Ethereum, it's going to be 2100. You break that 2100 mark, you're going to go look and check these lows of last summer in the 1700 range. Avalanche still has a little bit of support here, and that last low of $53 before it goes and checks some of those last summer lows in the 40s. Solana is hanging over a cliff right now. Next line of support on Solana is at the $74 range before it can start looking for a downside. Matic kind of hanging on here, 62 cents is the last summer low, and it's already broken its last line of support. It's hanging on right here at $1. So if it breaks that level, probably we'll go down and test that low from last summer. So we'll have to see if markets can hang on here, get a little rebound. Cardano has been a little bit up and down here, kind of working on that last line of support as well before it falls back to these lows last year. And these are the really dangerous ones. When you start looking at Solana, you start looking at Matic, Cardano. These are at the last critical line of market structure support to where they will revert back to lows before the bull market of last year. Just to give you an idea, that's about 18 cents on Cardano. That's around 50 cents plus or minus for Matic. And then prior to that, about 5 or 10 cents. Solana, you get back to where Solana was at 50, 60 cents. And then the next level is that 16 to 20 cent range. It'll be interesting to see if these break major market support and get back there. This is Chainlink hanging into that last line of support before it could drop down potentially back to about $4.80. Crypto.com, newer on Coinbase. So we'll just have to see what holds up here right now, testing some range lows going back into last year of about 20 cents, somewhere in that area. So all of the major altcoins are kind of hanging on that major macro structural support where if it breaks, it's going to go back to pre-bull market pricing of last year into 2020, early 2021 before the bull run, which could be a good thing. That's where your opportunities are to get in to some of these plays, but you have to be careful because right now it looks like the altcoin market wants to revert back. And let's just take a look at the total altcoin market. And there's a lot of support here for the market as a whole. But these areas here back in 2020, 2021 is what I'm talking about, where a lot of these coins are looking to hit. So that's your downside risk. That is the potential that we're looking at without a bull market rally in traditional markets and Fed reversing course. Altcoins will likely potentially go back and test some of those levels. The real question is going to be, is Bitcoin going to do the same thing? And right now you've got last summer lows of 29,000, then you've got that $20,000 previous high that it would have to get through to be able to go back and test that pre-2021 bull market base accumulation range of about 10,000. So I don't believe that it'll get down to that level. I think 29 is going to be a tough level to break, but if it does, And if we have a major sell-off in the markets, it probably will, then you have that 19,000 range as support. And then obviously we know where the worst case scenario was in the pandemic. And prior to that, the 2017 bear market lows of about $4,000, $3,500 to $4,000. So those are the things that I am looking at right now, price action that I'm tracking. So I will keep you updated. We will see how things develop through the rest of the day and through tonight in the crypto markets. And then we'll see what tomorrow brings. But you know what they say, sell in May and go away. So we may be looking at a sell in May, go away, enjoy the summer kind of a thing. But if you start reaching some of those macro lows on cryptocurrencies in the stock market, it might be a good time to jump in. So we will keep an eye on that and track it as it goes along.